Hey, it's Tim and Lisa, and you're listening to the REI Concierge podcast. The REI Concierge helps Americans living abroad find and buy great investment properties in the U.S. From analyzing markets to finding local partners to closing your first deal, we are partnered with you every step of the way. Let's jump into today's episode. Hello and welcome back to another episode of the REI Concierge podcast with Tim and Lisa. We are really excited to be joined today by Brandon Hall, who is the founder of a firm called the Real Estate CPA. And just for a little bit of background, a lot of our listeners know and are familiar with Tanya Salseth. Tanya was the one that introduced me over a year ago to Brandon's firm. And I have been a client of the Real Estate CPA Firm. And Brandon, we are so excited to have you. And there's a lot of questions that come up clearly about taxes and real estate and things like that. So we are looking forward to jumping into our conversation with you.
Yeah, appreciate you having me on the podcast. I'm excited to do this.
And I will also say really quickly, we'll link all this in the show notes, but Brandon has his own podcast. So many incredible resources that you guys put out from the Real Estate CPA Firm. So we are going to be really happy to share those with our listeners as well.
Thanks. I appreciate that.
So Brandon, let's welcome, first of all, it's good to finally meet you in person. I've heard a lot in person. By in person, I obviously mean on a video call, as is most meetings done nowadays. But I've heard a lot about you from Lisa and just the work she's done with you guys, as well as, with Tanya and other folks. So we always like to start with kind of our guest's personal journey. So why, did you start, what came first, the CPA or the real estate? Were you a real estate investor and then said, I need to figure out how to do these, get these tax advantages? Or were you a CPA and said, oh, all my clients are real estate investors. Maybe I should get into that. I'm always interested to hear about that.
Yeah, good question. Good question. So I graduated from college. I had audited a real estate class, a real estate investing class. That was like a graduate level class. So audit means just sat in on it, couldn't actually participate because I was an undergrad. But the guy teaching that class is like easily the smartest real estate investor that I've ever met in my life. Just all the financial modeling that went on in that class was crazy. So that kind of piqued my interest. Then I graduated college. I went to work for PricewaterhouseCoopers as a consultant, and then moved over to Ernst & Young also as a consultant, doing like government consulting, that type of thing. And throughout that time period at the Big Four, kind of realized I didn't want to stay for 20 years to make a partner. I didn't feel like my opinions were being heard, or that people really cared about what I had to say about whatever was going on projects and things like that. So I started looking for alternative ways to create income, and found real estate again. So I'd taken that course, but found it again. My parents had also around the same time started investing in real estate themselves. So I was able to ask them a bunch of questions and kind of get a good idea of what that looks like. But yeah, I bought a property, a 3-unit property, while I was still at Ernst & Young, and I was super excited about it. It was cash flowing like $700 a month, something like that. So it was good. It was a great return. I still have the property today, and it like on the original cash on cash, it's like a 25% return. But now the equity's built up so much that it's like 5 or 6%. But that property haunts me though, even today, because I can't go and buy another property because that one's like, I've anchored myself to that return. And so now anything in today's market, I just can't, but anyway, still have that property today. It's done really well. But that kind of gave me the bug. And through that process of buying my own real estate, I got on BiggerPockets.com and was asking a bunch of questions there. And then I noticed that people were asking tax and accounting questions. So I started answering the tax and accounting questions because I was studying for my CPA. So all this like timing stuff was kind of working out. There weren't a whole lot of CPAs on BiggerPockets at the time. Now there are. So I don't think the same strategy would work again. But at the time, it was like me and 2 other people jumping in there, and I would set up all my keyword alerts to make sure I was the first one that answered questions, that type of thing. But I got addicted to that because at the corporate job, I wasn't getting any like positive feedback or really any feedback at all. But then on BiggerPockets, you would answer a question and immediately get a thank you, you rock, you're amazing. And I was like, man, I like this. So so I kept doing that, and it was a while, but I think it was like a period of 6 months or so. Somebody finally reached out and was like, are you taking on clients? And I was like, well, I've always wanted to be a business owner. didn't really want to run a CPA firm because I know it's incredibly hard to scale and I don't really want to do tax season and all that jazz. But I was like, you know what, whatever, let's give this a shot. Let's see where this goes. So I said, yeah. And then I started taking on a lot of clients from BiggerPockets and enough to leave the Ernst & Young job and open up the Real Estate CPA and run this full time. So now we have 21 total staff. And that was back I started the firm, officially moved into the firm end of 2016. So now we have 21 total staff. We're adding 8 more by the end of this year.
Wow.
And we work with about 700 real estate investors across the United States. So providing all sorts of tax planning, tax accounting, and just kind of business consulting services.
Wow. So we can go in a million different directions, but I want to stay there for 1 second.
Sure.
How, just for like our entrepreneurial minded listeners, what was the impetus where you're just like, this is kind of cool, but I have no future security in terms of starting my own company. I don't really want to do tax. So all those reasons you just said why you don't want to start your own CPA firm, what made you say, let's do it anyway? Like, was there one thing, or was it like, let's just try this, and if it works, it works. If not, we'll figure something else out. Like, that's always fascinating to me.
Well, for me, I'd always wanted to run a business. So in college, I'd experimented like with t-shirt shops and random things like that, and made very little money, and in other areas made a little bit of money. But now I was like, all right, I want to run a business. I've got experience in the corporate world. I know that I don't like this. I don't like bosses of me. I just think that I can do it better and faster and more creatively. Sure. And back then I was naive, and looking back on myself, like I probably wouldn't hire myself, but now that I've got the experience, I fully believe that was the best move. But yeah, no, I just, I'm pretty risk tolerant. Okay. I viewed it as a CPA firm. So I knew I wanted to run a business. I wasn't sure about a CPA firm because I was like, again, the scale piece, like I wanted to do something big. Anything that I did, I wanted to be big. I wanted to change the industry, and I couldn't really figure out how that worked with a CPA firm. Everybody that I talked to that was running CPA firms was like, oh, it's such a pain, and you grow at 2%, 5% per year, and the industry average is like 6% per year. So it's not growth to get excited about. But I was building the firm on the side while also working at the Big Four, and I was building it really fast. And so I was like, well, the monetary risk is gone because it essentially replaced my income. So then the real risk is just in 10 years, where is this thing going to be compared to where could I be at like Ernst & Young? Could I be on my way to partnership or something at Ernst & Young? And, you make 300, 400, 500K a year if you're in that type of realm. So the monetary risk was big for me to try to figure out, but I just kind of believed that, I was onto something unique that not a lot of other CPAs were really looking at the time, and that I could just kind of get in like with a good brand building sort of marketing campaign, and just become the real estate CPA in the space, and just keep pushing that really hard. So I made a commitment to myself that I was going to try to hire people smarter than me in tax to get the job done, and that I would be the one that focuses on the branding and the marketing and the scaling. And that commitment, holds up for half the year, and then it plummets the other half of the year when I have to get involved in tax preparation. But for the most part, that's what we've done, and we are on a mission to change the industry. We're doing it in 2 ways. One, we're going to be we are I shouldn't say we are going to be, we are a remote firm. So we want to build the model, the blueprint for other firms to look at and say, oh, that's how you run a remote firm. And 2, we haven't done a great job of this, but this is why we're hiring 8 people. We're trying to focus in on creating a people first organization. So, our belief is that if our employees love working here, all of our clients are going to have great experiences too. So we're trying to really invest in 2022 in our people, get them the appropriate support that they need, get them the appropriate training that they need. And ultimately, that's what we're trying to do, is build the model firm for the industry in the future. So we want firms in the future to be able to look at our firm and say, that's how you run a firm. And that's the goal. That's the mission. So it's kind of become like bigger than me, which is really cool. But I remember my dad calling me up because I was talking to him about, I was like, I'm going to jump ship. I'm going to leave Ernst & Young and do this business full time. Like, I've got the cash flow. I was house hacking at that point. I'd bought another property, a 3-unit. So I was house hacking one. So I didn't have any expenses. I was like, I'm going to do this
Nice.
My dad was like, well, what about health insurance? It's like, dude, health insurance is the least of my worries. I'm 25 years old. I'm healthy. I run all the time. Like, I'm worried about like, am I going to be able to eat next month? Like,
Dads love the health insurance question. Like nothing else matters. What about health insurance, son? Yeah, no, I've gotten that question multiple times myself. That's so funny. But I like Brandon, I like your mindset. So it's kind of like the whole like Cal Newport, so good they can't ignore you thing, where it's just like, hey, average isn't good enough. Like if you want to really change the industry, you have to be the guy or girl. And you were the guy on BiggerPockets for a while in terms of CPA questions. So it's like, I think if you have that niche and like that forte where you're the best at what you do in a specific niche, you can just run with that. And the sky's the limit. So I love that. And another thing that kind of parallels real estate investors, and I'll let you talk because no one wants to hear me, but another thing that kind of parallels real estate investors is you said the monetary risk was gone. You know what I mean? Like the money you were making on the real estate CPA or whatever you guys were called at that time, kind of surpassed your salary at Ernst & Young. So that was kind of like a huge cushion, you know what I mean? And a lot of real estate investors some real estate investors think this is the best thing ever. I bought a triplex. I'm making $700 a month. Time to quit my job. And we kind of like, with our clients, Lisa and I are like, whoa, how are you ever going to get a loan again? That's $700 a month. Do you like food? Like you can't do that yet. So I think that taking the monetary risk out of the equation for real estate investing is kind of like a good analogy there, where you get a couple properties, maybe you get a couple grand in real estate, just passive cash flow where you can quit that job and live a very basic life. Then you can really get big if that's what you want, and it's not one size fits all, it's slow and steady for a lot of people, sky's the limit for other people. But I think taking out that monetary risk is a huge impetus for people to kind of take that next level. So I appreciate you pointing that out.
Yeah. Well, it's important too, because I think there are very few people that are actually willing to, do the couch surfing while they build their dream. And I was not one of those people, right? So I was not going to give up being able to go to a nice restaurant and do things like that, or give up my latte. That's the classic, give up your $2 latte. I'm not going to do that. Right. So how can I build a business and enjoy life at the same time, and not take that significant of a risk? And for me, the answer was, well, I still have my W-2 wage, right? So I'm going to use that to go acquire another property. I'm going to put as little down as I can. It's going to be multiple units. I'll live in one of the units, rent out the other units. And that's exactly what I did. My girlfriend at the time, who's now my wife, I charged her rent. So, I'm like, dude, I'm trying to reduce my risk. That's right.
Business first, have a
job.
Honey.
I don't have a job. You're paying rent. That's the way it works.
You knew it was true love when she stayed around.
She stuck around. I don't know why, but she stuck it out. But yeah, no, it's just I was really looking at anything that I could do to reduce my monetary risk so that I could just focus on building. And there were things that I did in the business at the time too that reduced it. Like I would take somebody's, their annual planning fee and their annual tax preparation fee. I would take that and I would divide it by 12 and I would charge them monthly instead of like getting these like, installment payments throughout the year. And we don't do that anymore because we don't need to do that anymore. And I think that it actually doesn't really align that well with the client interest anyway. But at the time, that's what I needed to reduce the risk. That's something that I did. But yeah, I focused on the branding. I focused on the marketing. I focused on learning as much as I could about tax. I was reading every tax court case. I was reading through the regulations and the tax code so that I can understand it. I made a lot of mistakes. There and what I've learned is that, if you're going to build a business, you can deliver a pretty solid client experience when it's you and a handful of other people. But when you start scaling up, when you start adding people, when you get to 10, 15, 20 people, it becomes your personal inputs do not impact the client experience as much unless you focus on the right inputs, right? And that has taken us a long time to figure out. So if any of our clients are listening to this, they're probably nodding along like, yeah, like it was great for 2 years and then it sucked for 1 year. It's like, so now we're recognizing that we're going, all right, we need to focus on the right inputs. We need to focus on getting everybody else in our firm to the level that we are at. And that's again, doing the investment in the training, where we've got mentor programs going on in the firm now, trying to help coach them on the entrepreneurial side of it, the real estate side of it, so they can understand from an investor perspective what it looks like But yeah, that was something that I have unfortunately learned, is that, you can provide great client experience, and then client experience dips as you scale. And then you try to figure out, all right, how do we get it back up? And then you get it.
Listen to the full podcast on Spotify, Apple, Google, or any of your favorite podcast apps.